a lot to cover and not that much time to cover it in. We're going to be talking tonight about counterfeiting money. Not something you would expect your government to do, but it's actually something that the U.S. government has been doing for quite a long time. Give me just 1 second. Okay. All right, so let's get right down to it. We're going to talk about three very important dates in U.S. history today: 1913, 1933, and 1965, as it applies to counterfeiting. The first date, of course, 1913, is the date that the Federal Reserve System was established. 1933 was the date we went off the gold standard. A lot of people will tell you that that actually happened in the 1970s, but that's not really true. It was 1933. And 1965 was the date when the United States of America started counterfeiting its coins. So, if Washington was alive today, he'd be very upset, I believe, to see his likeness being used on counterfeit money. But that's exactly what you're carrying around in your wallet. Most of you think of the pieces of paper issued by the Federal Reserve as money, but they're not. They're counterfeits. These are not money in the sense that the Constitution envisioned for our money. And the interesting thing is that our counterfeiting is not being undertaken by criminal gangs or by foreign governments. There actually was counterfeiting done by foreign governments, particularly during World War II. Germany was counterfeiting English pounds by the millions of dollars, or millions of pounds, and doing it to destabilize the English government. And there are rumors, but they're still just rumors, nobody's been able to actually prove it, that the United States was actually counterfeiting money of our opponents and circulating them during World War II. Probably never know for sure on that one. But when it comes to counterfeiting, it's all a matter of terminology. You see a inkjet printer on the left there. Some teenagers were recently caught, I believe it's in New Jersey, making counterfeit money on an inkjet printer, and they got arrested for it. When regular people do make money, it's not worth anything. It's called counterfeiting, and it's they're labeled as criminals. But, you know, they can make a few hundred or a few thousand or even $1 million, and they're considered as criminals. But when people make trillions and trillions of dollars that are backed by nothing, they're called politicians or leaders. Interesting. Two of the dates that I mentioned earlier, 1913 and 1965, are key dates as far as U.S. government counterfeiting. 1913 was when we started counterfeiting our currency. 1965 was when we started counterfeiting coins. And I define counterfeiting by issuing something that's called money that is actually backed by nothing and in real terms worth nothing. It all started with the Romans, those cotton-picking Romans. And not surprisingly, with the Roman politicians. Now, the Roman politicians were like politicians everywhere. They wanted to make the people happy so that they could stay politicians. Here you have a view of the Roman Senate and a senator orating, and a lot of the senators sleeping. Not surprising. But they did a lot of things. They created huge public works projects. The Romans had a welfare system. They had free public entertainment. That's what the Colosseum was. They had lions there eating Christians, and people would come and cheer, and gladiators and all kinds of, they didn't have cable back then, so They had to do something for entertainment. But all that was paid for by the government. And it all cost money. So as politicians are wont to do, they ran out of money. Well, the Roman politicians taxed the people as far as they could until they were right on the edge of a tax revolt, where people were going to, the sentiment was that there was going to be an armed rebellion against the government if they raised taxes any further. And so what to do? They didn't have the printing press that we have today where we could just print trillions of dollars. You can't print silver and gold. So they devised their own way of creating counterfeit money. They first started with clipping coins. If you've seen ancient coins, you'll very often see them looking like this. They're not round. They very often have edges that are uneven. It's not just because they broke off or were worn off. In many cases, it's because they were actually clipped. When the coins would come back into the treasury of Rome, government employees would clip off a little bit of the silver or gold off the edges, and then they would melt that down and make new coins with it. The word debasement comes to mind. When we talk about debasing something, we talk about debasing currency. But the word originally was coined, to use a pun there, the word was coined to describe the devaluing of coinage. And it was done originally by taking some of the metal off the edge of the coin, melting it down, and creating new coins with it. And then there was another way that the Romans used to debase the money, which we'll talk about in just a minute. But we have adopted that term and applied it to currency these days. And when the government makes our money worth less and worth less and worth less until it's worthless, we call that debasing the currency. But as I said, it's really a coin word, not a currency word. Well, the Roman people were not stupid. They got hip to the fact that their coins were lighter and not so round. And so they started cutting ridges in the edges of their coins so that they'd be able to tell if the coins had been clipped. After a while, the government realized this, and they came up with another way to cheat the people. The idea, though, of the ridges was a pretty good idea. It wasn't something that was practical to implement in the minting process because back in those days, all the minting was by hand. The way coins were minted was there'd be an upper die and a lower die, and you'd put a planchet of silver or gold on the lower die, put the upper die on, and then a guy with a big old sledgehammer would whack it. And that's the way coins were made. What you're looking at there on the screen is a reeded edged coin. And later on in the transition of things, coin designers decided to use the idea that the Roman citizens came up with and incorporate it into the design of their coins. But this couldn't be done until there was machine minting of coins. And what was done is they created a collar. So this was in addition to the lower die and the upper die, there was a collar that was put around the edge of the coin, and that would impress this reeded edge. But it was only done with precious metals by tradition. So if you take some coins out of your pocket, you'll find pennies and nickels in there that have smooth edges. And then you find silver coins, or coins that are supposed to be silver, we'll talk about that in a minute, that have reeded edges. This was designed so that the governments could show to their people that these coins were genuine precious metal coins and that they had not been clipped. All right, I mentioned that the Romans figured out a new way once the people got hip to the fact that they were clipping the coins. They figured out a new way to debase, and the way they did it here was to add base metals, and that's where their debasement actually comes from. In 54 AD, when they started this criminal activity, interesting, when citizens do bad things, they're called criminals, but as I said earlier, when the government does it, it's perfectly legal. The government can make anything legal that they want to, even things that if everybody else does it, you go to jail for. So if any of us were to do what the Romans did and what our own government does, we'd for sure go to jail. But what the Romans did, starting in 54 AD, when the coins were 94% silver, or what's called 940 fine, they started melting them down as they came in and adding base metal to it. At first, they just added a little bit. But then when they started saying, hey, this is working, the people don't seem to notice that there's anything wrong. The coins still weigh as much. They're still the same size. We're getting away with this. They did what all politicians do. They got greedy. When politicians figure out they can tax, they say, well, this is working. Let's tax some more. And they keep on taxing until eventually the people's backs start to break and they figure they have to do something else. Well, in this case, they kept on adding more and more base metal to these supposedly silver coins until by 218 AD, the silver coins were only 43% silver. And then just 50 years later, you can see how the greed quotient speeded up there. The coins had practically no silver at all. Now remember this progression because you're going to see how it played out here in the United States. Now, we and the other developed countries of the world have modernized the Roman scam. To compare what we're doing today to what Rome did would be like comparing the space shuttle to a Roman chariot. We've really taken the cheating of the populace to totally new levels. And today our chief cheater is a guy named Ben Bernanke. He's the head of the Federal Reserve System, or chairman as they call him. Now you've seen me quote this before if you've been on previous webinars, but I'm going to give you another quote from the same speech. But he said in a speech before the Economics Club in Washington, D.C., the U.S. government has a technology called a printing press, or today it's the electronic equivalent, that allows it to produce as many U.S. dollars as it wishes at no cost. Actually, we've quoted him before, we missed that phrase, or today it's electronic equivalent. The fact is that of all the new dollars being produced, the trillions and trillions of new dollars that are being produced to cover the huge things like the bailouts and the TARP and all that, only a very small percentage of them, probably 3 or 4% of the current dollars being produced are actually in print. Most of them are just digitally produced. They're just magically produced by computers, and they're never actually in print. Now, you've heard Greg Halloway and myself both say many times that the U.S. is committed to inflation. Sometimes people will talk about deflation on the news, or sometimes people will call me up and I'll be talking to me on the phone and they'll say, well, what about deflation? Isn't that a problem? Aren't you worried about deflation? And I just laugh because the U.S. government is firmly committed to inflation, and they've got the power. So how can there be deflation? In the same speech, this was on November 21st of 2002, Bernanke said that it was in the interest, this is a quote here, in the interest of the U.S. government to create inflation because it reduced the national debt. Now think about that for a second. If you talk to anybody who understands hyperinflation and what has happened in other countries where there's been hyperinflation, you find that it actually benefits some people. We think of hyperinflation as being a bad, ugly thing, and it is if you're on a fixed income or if you have savings in the bank, CDs, bonds, or if you're on a fixed income. But if you have a lot of debt, hyperinflation can be good for you. I've seen estimates by some economists that many people that have a mortgage on their home, say a typical 30-year mortgage with 20, 25 years left on it, will be able to, if we have serious hyperinflation in this country, will be able to pay off their entire mortgage with the equivalent in today's dollars of anywhere from a month to 1 year's salary. Can you imagine that? Just pay off your mortgage with a month or two's salary? But that's what hyperinflation does. It reduces the value of the money so far that you have the same number of dollars that are worth so little, that you could actually pay off huge debts. When Greg took a tour of Germany, the tour guide told him that when Germany had their hyperinflation, it went from 4 Deutschmarks to the US dollar in just 4 years to 4.2 trillion Deutschmarks to the dollar. That's how much hyperinflation they had. 1 trillion times hyperinflation. And one of the reasons why they did it is because they were so deeply in debt. Their war reparations to France and the other allies were so huge that they just decided to pay it off with junk money. And they eventually paid off their entire war debt with the equivalent of 17 US dollars. So it looks like the U.S. is learning that lesson, and here's Bernanke frankly saying in a public speech that it's in the interest of the U.S. government to create inflation, not just to allow it to happen, but to create it, because it affects the U.S. debt. It actually reduces the amount of debt. Now, Michael, usually I don't take questions to the end, but this is a good question. He says, I'm missing something here. How can the U.S. government create inflation when it doesn't control its money supply? Inflation is a mechanism of the Federal Reserve. Well, the Federal Reserve is a private organization. Some people will classify it as a quasi-governmental organization. The best definition I've seen of the Federal Reserve is one by the author of The Creature from Jekyll Island, who's done more research on the Federal Reserve than anyone I know. He's the one that basically blew the whistle on how the Federal Reserve is created. He calls it a cartel. So a cartel basically is a cooperative arrangement between private enterprise, or in this case, some would say criminal enterprise, and the government. The government allows it to exist for its own purposes. But the government and the Federal Reserve do work hand in hand, because the Federal Reserve issues the U.S. government's money. It then lends that money back to the government and charges the government interest on it. So people ask me, how will we ever get out of debt? Well, as long as the Federal Reserve exists, we will never, ever pay off our national debt. Even if we raise taxes hugely and cut costs immensely, there will always be a national debt, because the Federal Reserve prints this money and then loans it to the government. I know it sounds totally insane. It is totally insane, but that's the way the system works. Do a little study on the internet, and you won't see anyone disagree with that assessment. That's the way the system works. That's why you'll see me talking a little while about Ron Paul and his book, End the Fed. The only way to end this insanity is to end the Fed. But it's a very complicated web. There are powerful people in government, in banking, and in business, and whose interest it is that all of this go together like it does, because they make huge, huge amounts of money from it. Okay. What you're looking at here is constitutional money. This is the money that we had prior to 1933. Gold and silver. And if you go through the Constitution word by word, as I have, you will find no place where paper money is authorized. Only silver and gold are authorized as money in the Constitution. Now, this is demand money. You heard Chris mention earlier that we're giving away this month, as we did last month, a $20 gold certificate. The person who wins that will be winning a little piece of history. These are very hard to find, and that's why the rarity of them bids the price up. Technically it's only worth $20. That's what the paper value is. The government doesn't honor it anymore, so it won't give you $20 in gold coin. If you did, it'd be worth over $1,300. But it doesn't honor its commitment anymore. But still, just its rarity puts it up to being worth several $100s. But as I say, it's a piece of history. If you look up at the top, it says, this certifies that there have been deposited in the Treasury of the United States of America $20 in gold coin payable to the bearer on demand. So that's why I refer to this as demand money. It's not quite the same as the gold coin itself, but it represents the gold coin. So you've heard the expression good as gold. Well, this is where it came from. People that didn't want to carry around the gold coins because they're actually pretty heavy. One of the gentlemen on the call today bought 5 1-ounce gold coins from my company, and when I delivered them to him the other day, he commented how heavy it was. It's just 5 coins, but those 5 individual coins weigh almost a third of a pound. So it got a little heavy for people carrying around their pocket. So it was a little more convenient to carry the currency, the paper money. But this was called good as gold because it was. The money that you have in your pocket today is not good as gold. Now here's an interesting historical fact that I have never heard anybody comment on, and it really surprises me. Usually when you hear people talk about the ending of the gold standard in 1913, they usually talk about the beginning of the Federal Reserve System in the same breath, and they talk about the fact that FDR pulled all the gold certificates out of circulation and all the gold coins and made people turn them in, or you could suffer severe consequences. And he gave us in exchange for them Federal Reserve notes. But I've never heard anybody teach us or comment on the fact that for 20 years the Federal Reserve notes circulated side by side with the real money. Now, why is that significant? Well, I believe it's part of an overall plan. I'm not going to say the word conspiracy because then people will say, well, Tom's a conspiracy theorist. So I'm not going to say conspiracy. I'm just going to say there was a plan, because 20 years before the ending of the gold standard, the Federal Reserve System was started, and the Federal Reserve notes were issued. At first, go back and read your history, a lot of people said, I'm not going to take this money. It's not backed by anything. They looked it over. They said, I don't see where it says gold certificate on it. I don't see where it says there's any gold coins payable to the bearer on demand. All it says is Federal Reserve note. It doesn't say, issued by the Treasury of the United States of America. And it just says it's known as legal tender for all debts, public and private. I don't trust this stuff. And a lot of people wouldn't accept it. So it took time for people to get used to it. Sort of like the frog in a pot of water, if it's cold water, he'll sit there. And you gradually bring up the heat. He doesn't notice what's going on until he's being boiled to death, and it's too late. What happened was people got used to this new funny money. They found out that when they took it to the store, it was being accepted. And, some of the stores, some of the smaller companies wouldn't accept it, but after a while, everybody was accepting it, and it was treated the same as the real money. And so that's when the government figured it was time that they could go ahead and make their move and confiscate all the gold certificates. Because until they did that, they wouldn't have the control that they wanted. But just keep that in mind. It was not a coincidence that the Federal Reserve was instituted 20 years before they confiscated all the gold. The politicians hated these. Here you have a picture of a $50 gold certificate. Here is a $5 silver certificate. The silver certificates are $1, $5. You had $50, $100, $20 gold certificates. They hated these. Why? Because these represented accountability. No precious metal demand money could be printed unless there was silver or gold to back it, which meant the politicians couldn't spend all the money they wanted to. and they lusted after the ability to just spend money willy-nilly. These things made it impossible. They wanted to get rid of them. Took them a while, but they did it. The Federal Reserve System was a politician's dream come true, especially in 1933 when we went off the gold standard. It just made these guys so happy because now they could print all the money they wanted to buy all the pork they wanted to buy all the votes they wanted to, and to get reelected forever. FDR became dictator for life of the United States, the only dictator we ever had. I mean, he couldn't be touched. He had so much money to be reelected. He's the only president ever elected to 4 terms. And after he died in office, finally, the Congress set term limits on the presidency. That you'd only serve 2 terms. Unfortunately, they didn't have the guts to set term limits on themselves, so we had people like this Senator Robert Byrd, a Democrat that I think he was, in Congress for 120 years or something like that. Basically, that's a joke, by the way. Basically, with enough money and the power that comes from being in office, you can just get reelected and reelected and reelected if the conditions are right, because you can spend the public's own money buying a bunch of things that are not needed at all, but that create jobs and create money flow into your district, and just keep on getting reelected and reelected and reelected. So this is why the Federal Reserve System was, as I said, a politician's dream come true. Okay, now remember the slide about the Roman coins? George says, why do I get the feeling you have something against politicians? George, I really don't. I have nothing against honest politicians. I just really, really don't like crooked politicians. And unfortunately, they're in the majority. Now, you remember the slide about the what the Romans did to their coins? Well, let's look at what the United States of America, the land of the free and the home of the brave, did to our coins. In 1964, and from way back from there, our silver coins were 900 fine, or 90% silver. The next year, we chopped that in half. We went to 45% silver. 4 years later, there was no silver. We're worse than the Romans. At least they kept 1% silver in their silver coins. Ours have no silver whatsoever. George says, most of the politicians are crooks. You know what? We can't really blame them, because we're the ones that are stupid enough to elect them. You know, if we go into certain neighborhoods and leave our keys in our car and leave our keys in the ignition and don't lock the doors, knowing that there's people there that are criminals in that particular neighborhood, we shouldn't be surprised if our car gets stolen. And if we elect crooks to office, we shouldn't be surprised when they steal from us. You know, we bear some of the responsibility. Anyway, our so-called silver coins today are actually copper, and they're sandwiched between a nickel zinc cladding, as it's called, made to look like silver. And here's the really crooked part of it as far as I'm concerned. They still read the coins. They put the reeded edges on them, which have always been used only for precious metals coins. So they're deliberately making the coins look like silver coins. They coat them to look like silver. They reed the edges to make them look like silver, knowing that some people still think that they're silver coins. But since 1969, there hasn't been a speck of silver in any of our so-called silver coins. It's criminal. Okay, required reading. The non-federal Fed. The Federal Reserve System, as I mentioned earlier, is not federal. Matter of fact, the whole name, Federal Reserve and System, all three words are lies. It's not federal. It's private banks, a collection of private banks. There are no reserves whatsoever, and at least in public hands. And it's not a system. It's a central bank. Now, why did they call it a system rather than just being open and calling it a central bank? Today, Bernanke calls it the U.S. Central Bank. But why did they not call it a central bank originally? And for that matter, why didn't they start a central bank when we first started the nation? And for that matter, why wasn't there a provision for a central bank in the Constitution? Well, all those questions are connected. And the fact is that the Founding Fathers suffered under central banking in Europe. They understood the evils of central banking. They knew that the bankers, the private bankers, got rich while impoverishing the people, and they just said, we're not going to have it here in the United States. Now, Founding Fathers were very smart. They were very forward-looking. They got most things right. To me, the one thing they neglected was to put a prohibition against central banking in the Constitution. Now, eventually the socialists like Obama would have gotten around it, but it would have taken them longer. There's actually, most people probably don't realize this, there's actually a prohibition against any kind of a tax on income in the Constitution. But yet we have an income tax. So it was actually squashed by the Supreme Court twice until through trickery they were able to get the federal income tax passed, and by promising that it was only going to be temporary. You know, it was to help the war effort, right? So it was patriotic, and it was only going to be 1%. And here was the trick: it was only going to be against the evil rich people. Because back in the days when the income tax was passed, if you said that someone had an income, that meant that he had passive money coming to him. In other words, he had money coming from stocks or bonds, from rents, or from an inheritance or a trust. So if you had money coming from your trade or your craft or your profession, even lawyers and doctors did not pay the income tax because income was passive. Okay, so if you worked for your money in any way, shape, or form, then you didn't pay the income tax. So naturally, everybody said, "Well, sure, hey, why not?" You know, they let the camel get his nose in the door, right? And then, of course, they started gradually increasing the amount of the income tax. They started increasing the scope of it, till eventually it at one point got to as high as 70%, and it covered pretty much everybody. Well, same thing here. Same thing with the Federal Reserve System and the central banking. The Founding Fathers said, no, we're not going to have it. And it was a long time. I do another webinar where I talk more in detail about the first bank in the United States and then the second bank in the United States. These were the predecessors to the Federal Reserve System. But we actually had two central banks prior to this. The Founding Fathers held it off for a long time. Thomas Jefferson said that having private bankers issuing the country's currency was a greater danger than a standing army. He said that if we allowed the private bankers to issue the money, that one day that our children would be dispossessed of the land that their forefathers fought and died for. He was so dead set against it that he and some of the other Founding Fathers were so eloquent and passionate against central banking, they were able to hold it off for a long time. But eventually politicians got it through. First central bank lasted about 20 years. Then it was shut down, and after it had done a lot of damage to the country. And then there was a period without central banking. Then there was another central bank that also lasted 20 years. And then for a long time, we had enough sense to not allow it. And then, of course, in 1913, the Federal Reserve System was established. So make sure that you read the book on the left there, The Creature from Jekyll Island by C. Edward Griffin. It is a great book. He's done a tremendous amount of research on how the Federal Reserve was started by powerful bankers including European bankers and turncoat senators and congressmen. They met secretly on an island called Jekyll Island off the coast of Georgia and crafted legislation illegally, unconstitutionally, legislation was supposed to, if you're going to do it, it's supposed to be done in Congress. They did all there secretly, and then they came back and in a lame duck session of Congress, rammed it through Congress, bribed people, threatened people, and so on, and managed to force the Federal Reserve System that has cursed the country ever since then. Then the book on the right there, In the Fed by Ron Paul, hopefully is prophetic. Hopefully we will see an end to the Federal Reserve System. And people say, well, what would happen, the Federal Reserve, if it stopped, the whole country fall apart. Well, actually, the whole country would get a whole lot better quickly. And I'll do a webinar on that one day. It takes some time to put it together, but it would be one of the best things that can happen to the country, because the Federal Reserve is like a leech on our body sucking the blood out of the country. And then if you want a short version of these two books, I read an article called The Non-Federal Fed, and it's on conservativetruth.org, conservativetruth.org. Okay. Yeah, Patty says 608 pages of amazing research, yet frustrating information. Yeah, Patty, I'm with you. I was talking to someone today. We were talking about the fact that this information that we share sometimes is kind of depressing. And I was telling him, sometimes I'd just rather not know this stuff. I would rather, just go along happy and ignorant. But, I feel like that the Lord has called certain of us to be watchmen on the wall, to warn people that the Mongol horde is coming and going to attack the city, and we need to warn people. But it's amazing. I'll talk to some people, start to tell them what is happening to our country, and they'll just turn you off, because, and I don't think it's because they don't believe you. I think it's because they don't want to believe. They don't want to know that our own public servants, people who are supposed to be public servants, would be so treasonous as to allow this kind of thing to happen to their own country, just to benefit their own pocketbooks. Okay, what's the result of this counterfeiting? Well, the ultimate result, unless we take action, is going to be hyperinflation. No question about it, because as you counterfeit money, you're injecting more and more money into the money supply. The more money that's in the money supply, the less each dollar is worth. I use the example all the time of farming. If you're farming for grain or corn or apples or whatever, if you have a real big crop one year and you have a whole lot more apples or peaches or whatever it might happen to be, then you're initially happy because you've got a big crop. But then when you get to market, you're not so happy because everybody else has a big crop. You might have been praying for it, and the Lord blessing you get a big crop, but then you get to market and you find out that the rain falls on the just and the unjust, right? And so everybody's got a big crop, and the prices of apples that might have been, $5 a bushel last year are only $3.50 a bushel now. So the same thing happens with money. It didn't used to be like that. Now, it used to be that your money would always buy you roughly the same amount of goods and services because the money was backed by gold, and gold doesn't change in its value. Gold's price changes, but gold's value never changes. But as soon as the politicians disconnected money from gold, then everything changed, okay? Gold became just another commodity. Or the dollar, I'm sorry, became just another commodity. As long as the dollar was connected to gold, it had value because gold had value. Gold has intrinsic value. But as soon as they disconnect the dollar from gold, then it started free floating. And as you produce more and more dollars, as they inject more and more dollars into the economy to buy all their stuff that they want to, just like the Romans did, then the money becomes worth less and worth less and worth less, and we're now to the place where our money is practically worthless. 33 years ago, or I'm sorry, in 1933, 77 years ago, $1, the value of that same dollar is 4 cents today. We've had 96% devaluation of the dollar, 96%. So today it takes $55, 2010 dollars, to buy what $1 bought in 1933. Now here's a strong statement, but again, check it out. No fiat currency in the history of the world has ever survived. A fiat currency is a currency that's backed by the, quote, full faith and credit of the government. It's not backed by precious metals. No fiat currency ever has survived. Now, here's a list in red of nations that we've talked about in the past that have suffered hyperinflation or runaway inflation. Actually, 3 of those we've talked about in previous webinars, and one we're going to talk about tonight. We've talked about the German hyperinflation, where, as I mentioned earlier tonight, they had this huge hyperinflation where it would cost a wheelbarrow full of high denomination marks just to buy a loaf of bread. Argentina, where their inflation got so bad that the employers were having to pay the people twice a day. They would run out at lunchtime with their pay and buy up everything they could, because anything they bought was going to be worth more to trade with by the end of the day than the money was worth. And then they pay them again at the end of the day. They buy anything they can find on the shelves on their way home. Zimbabwe, we've talked about in the webinars, where it got to the place where here's a country where their dollar was almost exactly the same as our dollar 4 years ago. $1.25 Zimbabwe was $1 US, and yet today they've experienced 21 million% inflation, and it cost $100 billion to buy 3 eggs. We're going to talk about France here, but I just want you to understand that these are not isolated incidents. There's 24 other modern nations. Now, we're not talking about old nations, old style nations or old style economies like Germany was. We're talking about modern nations, nations within the last 40 years, including, Argentina, Zimbabwe, that have experienced hyperinflation. 10% of all modern nations have experienced the horrors of hyperinflation. All right, so let's talk about France a little bit. In spring of 1789, the Assembly issued 400 million livres. That was their denomination. It'd be like dollars or euros or whatever, of assignats. These are notes. In fall of the same year, they issued another 800 million, but they didn't want people to worry about hyperinflation, so they also issued a decree at that time saying that this was all they were going to do. 1.2 billion livres, that's it. Okay, the 400 million they'd already issued, this 800 million equal 1.2 billion, and that's the end of the road. Now, despite this, just 9 months later, they issued another 600 million, so 50% more than they promised was going to be the limit. Then in September of 1791, another 300 million were issued, and in April of that year, 300 million were issued. Actually, I got that backwards. I should have put April 1st then to September, but you get the idea. Point is, if you're doing your math with me, after they issued the 1.2 million maximum billion that they were that the legislature, the Assembly, decreed was going to be the maximum, they issued another 1.2 billion within 2 years. So now they've doubled what they said they were going to do. It got worse. Prices rose, but the wages didn't. So in 1793, a mob plundered 200 stores in Paris. They tried price controls. They called it the law of the maximum. The government said what the maximum price you could charge for an apple or for a loaf of bread or whatever. Remember when Nixon did that? He put in wage and price controls because of the huge inflation we're having here in this country. Didn't work then, didn't work for France. Output decreased. We're not surprised, because nobody wanted to work for the worthless money. By the way, I didn't mention it, but you know what the real cause of the fall of the Roman Empire was? If you were a soldier Would you be willing to go put your life on the line for your country for money that was worth 1% of what it was supposed to be? I believe that's the real reason why the Roman Empire fell, because so many of the soldiers were deserting because they were getting paid with worthless money and they couldn't buy food for their families. So they deserted, went out and started farming. And then, of course, in France, they started rationing. Then it got really bad. If you look on the left, that's a picture of that's an actual picture of an old French jail. It's a museum now, but how would you like to spend 20 years in there? That's what would happen if you discounted the money. In other words, if you said, okay, I'll take this worthless money the government's giving out, but I'm only going to give you like 50% or 75%. If you did that, you could be sentenced to 20 years in prison. Or if you committed the crime of saying, I'm not going to take your paper money at all, I want silver or gold, you could get your head lopped off. You got the death penalty if you traded in silver or gold. How's that for draconian punishment? And then it got still worse. By 1794, there were 7 billion livres, or assignats, in circulation. By May of 1795, it had gone to 10 billion. And by July of 1795, it had gone to 14 billion. That's 12 times the maximum that the Assembly had set by law just 6 years before. And then it got to 40 billion. Now when it got there, that's like 35 times the maximum. The government just was nuts. They just kept issuing money and issuing money and issuing money. They finally said, we got to do something or they're going to come and drag us out of our government offices and put us on the guillotine. So they did this dramatic thing. They took the printing place for the assignats and they went out in the square in Paris and they publicly destroyed them. They said, we're not going to print any more worthless money. Instead, we're going to print something called a mandat. So they started printing them. But within 2 years, because this was backed by nothing, the mandat lost 90% of its value. So they dragged them out into the public square and they destroyed them publicly. Twice now. They've destroyed the printing press plates to show their sincerity. But they finally did something about it. In 1797, both the assignats and the mandats were repudiated and a new monetary system based on gold was instituted. And they finally got out of their mess. There was a lot of pain and suffering along the way. And if they just called me, I could have told them this way back in 1789 and saved them all this grief. Of course, I wasn't born back then. So, folks, there's a lesson here. The United States can learn, if it will, from Germany, Argentina, Zimbabwe, France, and dozens of other nations whose economies and whose, more importantly, it's not the economies, it's the people, it's the families whose lives have been ruined by inflation. It's not too late. But frankly, I don't think we have much time. No one is going to put an announcement in the Wall Street Journal giving you warning, saying, okay, folks, November 15th, hyperinflation is coming to the United States. It's not going to be like that. I heard, actually I didn't hear it, but I saw a printed interview of a gentleman who had been in Germany. He was a very young man during the hyperinflation they had. He was interviewed by a guy from Princeton or Yale. And he said, we had no warning. Like lightning it struck. Suddenly people would not take our paper money. And you've heard me talk about the fact that at the worst of hyperinflation in Germany, you could have bought an entire city block of downtown Berlin, prime commercial property, the best commercial property in all of Germany, for 25 ounces of gold. How much would it cost you to buy 25 ounces of gold today? $30,000, $32,000. So, the gold standard. Our problems, just like Francis, started when we began issuing worthless currency. when FDR, who I affectionately call the greatest traitor that ever lived in the White House, took us off the gold standard. By the way, I'm not upset with him so much because he took us off the gold standard. You know, he claims that he believed it was the right thing to do. I can't look at the man's heart and mind, but the way he did it was so criminal. He basically said to the American people, if you don't turn your gold in, your money, first time in the history of the world that any ruler, even the worst despotic dictator in the world, the communists have never done this. He said, if you don't turn your money in, your own money, then we will send you to federal prison for 10 years and force you to pay a $10,000 fine, which today would be like a $500,000 fine, or both. So FDR was not a nice guy. He was the one that actually started us down the road to socialism, because in the same year that he took us off the gold standard, confiscated all the gold in the country, he confiscated, believe this or not, 40% of the wealth of the United States of America and gave the people instead worthless IOUs. And in that same year, he started all the New Deal projects and the other socialist programs that have put us on this terrible road that we're on now today. Now, people always ask me, I've been speaking on this subject all over the world. I've been traveling to various different countries all over the United States, and always people will ask me, well, why don't we just put the nation back in the gold standard? I would love to see that happen, folks, but it's not going to happen. Number one, we don't have any politicians with any guts in this country. We have a few, Ron Paul, a few others that actually have courage, but most politicians are not going to ask the people to make the sacrifices that would be necessary to put us on that road. But even if they did, there's not enough gold in Fort Knox to back even 3 or 4% of all the dollars that are out there. So that's not going to happen. But what we can do is protect our families and our churches by putting them on the gold standard. Well, how do we put something on? How do we put our family on the gold standard? How do we put our church on the gold standard? Well, it's very simple. You invest in gold. Instead of having, I saw an economist that wrote an article, and it'd take a while to explain his reasoning, but it made a lot of sense. He said that in the months since Obama's been in office, the dollar has lost in real terms 22% of its value. Now, if you look at the charts, it doesn't say that. It's lost nearly that much. But what he was talking about, like I said, it's a little complicated, but he's looking at the effect of the Obamacare, the TARP, the other major bailouts and so on. In just 1 month, we added over $1 trillion to the national debt. So when you take all that into account, he says that the dollar has lost 22% of its value. Well, Obama's been in office 20 months at the time he wrote this article, so that means that approximately 1% per month, your money that you have in the bank or in CDs or in bonds or whatever, any kind of cash form, you're losing 1% a month. So if you have a 2% CD, not even counting taxes, you're losing 10% a year. So when I say put yourself on the gold standard, I mean buy gold. So a little wisdom from the Word. We'll close with this. The Bible says a good man leaves an inheritance for his children and his grandchildren. That's in Proverbs 13:22. So what do you want to leave? Do you want to leave lands and gold to your posterity? Or do you want to leave crushing debt in the bonds of slavery? Because debt is slavery. Chris, let me turn it back to you for announcements, and then we'll take questions.
Okay. Well, Tom, that was quite interesting. Before we get into the announcements, there are a couple of comments, and Tom, I'm not going to camp out on these, but it does raise something that we all should give thought to. Here's a comment. In all this action taken by the Fed and the government, is it good or bad for the country? And if it is bad, why hasn't there been a revolt against this action? And then there's another comment that is almost parallel to that, and it says, here we have 535 people controlling 300 million plus, and we allow this. How sad. You know, Tom, it comes to my own mind that we've got an election coming up, and personally, I believe the U.S. citizens for too long have really taken our election process for granted. We have become complacent and, quite frankly, fat and happy with our way of life, and we have not taken a stand with those that run our government. But this year in the election, I'm not going to get into the political discussion here, but except to say we really need to give some thought this year to who we vote for and why are we voting for them. And I believe this year we really are going to see the people rise up and say to the government, this is where we're at, and this is what we want. And I, with many of the rest, many who are on this webinar tonight, am simply going to be hoping for a good outcome from the November election. Anyway, with that being said, let's talk quickly about our announcements. As we do each week, tomorrow at 6 p.m. Eastern Time, we're going back into our weekly gold webinar. On Tuesday night, we cover a variety of topics centered specifically around gold. And then on Wednesday at noon Eastern Time, we have a gold investor educational series, Gold 101 through Gold 401, and those sessions are specifically targeted to help any of you that are interested gain a good foundational knowledge as to how gold can be a good addition to your portfolio, how it can help protect you from inflation, and are there different ways that you can invest into gold, and are some better than the others. And you'll find those webinars very informative, and they will deal specifically with those topics. And then, of course, tonight we have our regular investor education series. We have a wide variety of speakers. We have a wide variety of topics. And as you can tell from tonight's subject matter, we typically don't dial it back. We try to tell it like it is and back it with truth that is researchable and provable. Generally, very enjoyable sessions and a lot that can be gained from participating. Webinar recordings, we get requests all the time for backup recordings of these sessions. You can request information about that by simply sending an email to webinars@bellsouth.net, as you see right in the middle of the announcement slide. And also, we would like to direct your attention to a website, christianfinancialconcepts.com. This is going to be a location where archive recordings will be listed and stored, and you can download those webinars directly from that site. This is a site that is being built, and we're adding content and subject matter to it real-time on an ongoing basis. So we would like to encourage all of you, if you have not gone over to that site, please do so. Check it out and see what's there. And then finally, as we started out mentioning, the contest is real, it's live, and there's real money being paid to the one who wins. Every time you log into one of these webinars on Monday night, Tuesday night, or Wednesday in the middle of the day, when you sign in, your name goes on the list, and we're able to tell how many hours you have logged in participating in webinars with us. The one who participates in the most webinars at the end of each month will win a real $20 gold certificate, which Tom showed in one of the slides earlier in the program tonight. And Tom, the last valuation, you said approximately $200 is what one of those $20 gold certificates would be worth.
That's
so
right.
That's, that makes it worth it, folks. Honestly, it does. Finally, if you have a question or if you need to talk to Tom real time, the number is on the screen, area code 561-753-5998. That will take you into the main office. Tom, I don't know if we have any other special announcements. Are we leaving anything out?
Well, You mentioned about the Christian Financial Concepts site. While you were making the announcements, I checked with Pete from Tech Support as he was leaving, and I asked him what percentage of the webinars we have uploaded, because he's been working very hard at this for the last couple of weeks. We now have about 50% of the webinars, and we do 2 to 3 webinars a week, have done for over a year now. So that's very, very good news to me. Folks, we've got some really, really excellent instructors that speak on these webinars. Greg Halloway is one of the top people in the world as far as knowledge of gold. John Muratori, the author of Rich Church, Poor Church, has spoken. We've had Will Carter speak on these, Rob Sansom, some really top-notch people. And then, of course, if we can't get anybody else, then I speak. But the point is, I've had people tell me, people that have degrees in business and finance and investing and so on, tell me that they've learned more on our Monday and Tuesday night webinars than they did in all the years in college. So that's very encouraging to me. There's a lot of great information. So 2 things I would encourage you to do. Number 1, invite your friends to join you on these webinars. And number 2, all the ones that you missed, go to Christian Financial Concepts. The memberships are free. I should say free memberships available. Go there, sign up. When you do, make sure you create your username and password so you can sign back in, and start learning. Because even if you don't have money to invest right now, if you follow some of the other advice of some of the other webinars, we have them there on how to get out of debt, how to order your finances, how to do financial planning. Eventually you have money to invest, so start learning now so you'll be ready to do it. I do want to address there's a couple of comments that Chris mentioned. I know Mash. I met him at a seminar up in North Carolina, and he lives in London. He asked, is all this action taken by the Fed good or bad for a country? Well, it's definitely very bad. And he says, and if it's bad, then why has there been a revolt? Well, there has been, Mash. It's called the Tea Party. And we have a lot of people that are as mad as heck, and they say they're not going to take it anymore, and I believe them. We have people. This is not your typical, it's not a party-based thing. They call it the Tea Party, but they're referring to the Tea Party way back that started our American Revolution, and so it's not a Democrat or Republican thing. These are people that are the American Party, I call it, and they don't really care whether somebody's a Republican or Democrat. If someone is going to vote for limited government, going to vote for a sound money policy in this country, then they're going to vote for them. So there is a revolt taking place. It's just that it's not going to be an armed revolt. Thank the Lord for that. And to Kenneth's comment about 536 people controlling 300 million, 535, he corrects himself. Yeah, but that's the way it's supposed to be. We elect those 535 people, and we're supposed to elect people that have the interest of the nation at heart, not their own interest at heart. And they have an unfair advantage. Once they're in office, it's very hard to get an incumbent out of office. So that means that those of us that care about the country have to work extra hard. I'm working on an article right now for Conservative Truth, and I'm calling it 1 easy decision and 2 not so easy decisions. And the easy decision is who to vote for. You don't need anybody to tell you who to vote for. Just look for the people that love America, that care about doing things the right way, and they're not hard. It's not hard to figure out who to vote for. But the 2 not so easy decisions are, number 1, to get off your tail and go out and vote. Unfortunately, we have a lot of people in this country that will talk a lot and talk about, complain about the elections and so on and the results of them, but they didn't go and vote themselves. And I say you don't have a right to complain if you didn't go and vote. So get off your tail and go and vote. Unfortunately, evangelical Christians are sometimes the worst offenders in this area. They just don't get out and vote. And then the third area is the hardest for a lot of people, and that is go out and talk to people. Go out and say, look, you need to go and vote, and here's here's the kind of people you need to vote for. You don't need to tell people who to vote for, but tell them what to look for. Look for people who care about the Constitution, not slick talkers, not people who just toe their party line, but people who love the Constitution, who love liberty, and who are willing to go out there and fight for the American people, not for their party or not for their special interest, but for the people. Kevin says, isn't Obama using FDR as his prototype? That should tell us something right there. Kenneth, I've written that I believe that Obama believes he's FDR reincarnated. He's tried to characterize this recession that we've had, which was really a mild recession compared to many other recessions that we've had. The stock market crash, which was bad, but wasn't nearly as bad as a half dozen others that we've had. And he's tried to make it into some horrible Great Depression because he wanted to be like Obama. He wanted to save the country, and he said that. He's basically said that he saved the country from the Great Depression by spending trillions and trillions of dollars we didn't have. So yeah, he does use FDR as his prototype or as his model, and of course FDR was the first really openly progressive, as they call it. You know, I call it socialist. I believe in calling a spade and not an agricultural implement. You know, and so FDR is a socialist. Obama's a socialist. So yeah, there's a lot of similarities there. Excuse me. So anyway, let me just close with this. You, as American citizens, need to get involved. You know, we've talked tonight about a major problem. We've talked about the fact that we don't have sound money in this country, and no country can long survive without sound money. The people will not work hard for money that they don't believe in. Other nations don't respect our money anymore. 77 years ago, we had the most respected currency in the world. That's why for all these years, our nation's currency has been the world reserve currency. That's where money has fled to when there's been times of stress and distress and wars and rumors of wars. But that's changing. Now more and more nations around the world aren't buying dollars. Sometimes they're buying euros. They're talking about other currencies. They're buying other currencies. And more than anything else, they're buying gold. And they're running away from the dollar. So if we don't go back to a sound dollar in this country, then we're going to become a third world nation. And that's just something I don't want to see happen. We've lived for all these years in the greatest nation on earth, and we shouldn't allow people who, for their own interest, are stealing us blind to continue to do it. We need to take action. So we have to get out there, and we have to vote for patriots. We have to vote for people who care about the country and who will do the right thing for America. So, what is it, 45 days to the election? Get out there and do something about it. Don't just complain about it. Do something about it. Okay, any last questions or comments?
Tom, I think we are pretty well to the end of the question list, and I think that's got us wrapped up for this evening.
Okay. I didn't mean to get into politics tonight. I wanted to talk about the currency, but unfortunately it's hard to talk about money without talking about politics, because the economy and politics are, as they say, inextricably intertwined. But I have a lot of hope. I really have hope for America. I believe that we're going to see the people rise up and say, you know, we're going to shake off our chains and we're going to make a change here. So I'm looking forward to it.
Okay, Tom, with that being said, by the way, those were good comments, and I think it's something we all need to give serious thought to. So I'm glad you went there. Well, folks, I think that's it for this evening. And again, tomorrow night, 6 p.m. Eastern Time, we will have our regular weekly GO webinar, so please be sure to check in on that. And then again, noon Eastern Time on Wednesday. So we look forward to seeing you tomorrow night at 6. And Tom, with that being said, we'd just like to wish blessings on everybody. And I think we'll go ahead and wrap up.
Okay. Thank you, Chris, for hosting tonight. Thank you all for being here. Good night, and may the Lord bless you.